All right, guys, so I'm going to be keeping this very, very simple. I'm going to get straight into it and not waste any time at all. Now, when it comes to actually improving your win rate, trust me when I tell you this is genuinely one of the only ways I have seen to effectively improve your win rate. And I'm not saying this just because I'm yapping. I'm simply saying this from experience. My win rate went from around the 40% when I was using standard SMC all the way up to some of the more recent 80% average win rates when it comes to the elite strategy. But this one confirmation, trust me when I tell you, it will change your game. So we're going to get straight into this. This is actually one of the live trades that I took this week and actually sent out live to all the members as well. Just before some of you lot question all of that, you can see clear evidence over here. Now, when it comes to the actual trade itself, it was a very simple SMC style of trade. You know, there's nothing too complicated about this. When we zoom out on the higher time frames, as you can see, we're moving in a downtrend. We've had a sweep. We've had a sweep of liquidity just above this high over here before taking us down for the rest of the day. As we broke some of this high time frame structure over here, as you can see, pretty much what we were expecting. My bad. Is pretty much this little pullback. As soon as we get to the pullback, that's when we start to look for sells. Now, let me differentiate the difference between a standard SMC trader and somebody who actually uses this extra little bit of confirmation that I'm going to be talking about. A standard SMC trader would look at this trade and probably think, okay, we've got a few points of interest. You know, let's just say, for example, we're looking for sells. They would say one over here. They would potentially look at one area over here. And then let's just say, for example, over here as well, you've got 3 potential order blocks that you can sell from. The standard trader, and what they will do is simply set their limits at these areas. As you can see, the second one would have hit. The first one would have been a loss for sure. And then the third one obviously did not get hit in this scenario. Now, the difference between what I'm trying to explain over here is this. And let's just actually draw it up. Whenever you get to a point of interest, this is exactly what you want to do. So usually our points of interest are defined as something like this, some kind of supply and demand zone that's created. A level is broken, and as we start to pull back at it, that's where we enter. Now, what I want you to do from now on is this one little thing. As soon as we get to the area, rather than actually waiting for our limit to be hit, and let me explain the difference as to why I don't use limits anymore. The whole reason behind that is because there's so many opportunities in the markets to actually set your limits. Now, the problem with that is the win rate is not as high. So in my head, especially when I started to use this technique, was how do I actually ensure that every single zone is validated? Now, there's a few ways you can do it, but in my personal opinion, this is one of the best ways that you definitely can. It is, for example, waiting for price to reach this kind of zone. As soon as it reaches this area, that's where you start to look for confirmations. What do I mean by confirmations? You're going to be looking for engulfing candles. Now, generally, engulfing candles are going to be coming in the form of something like this. You would have a 3 pattern move into the kind of area. And then as soon as that happens, the engulfing pattern leaves you with something like this. And essentially what we're going to be doing is entering on a market execution. As soon as that happens, rather than us just entering on a limit, we would basically be looking for our confirmation. Now, when I tell you, as I started to use this thing in the beginning, of course, it can be misleading at times simply because you aren't used to it, right? So let me just tell you a few tips that you can definitely improve on. When it comes to actually looking at your actual trade, pretty much what you're going to be looking for is the engulfing candle significant enough? Now, what do I mean by this? Let's just say, for example, the engulfing candle just engulfs the previous one by a tiny bit. For me personally, that's not going to be enough. Usually what I like to look for is something like this, where, as you can see, this is the point of interest that we are waiting for. Originally, it was somewhere up here. But generally what happens is we are either going to wait for an order block or for some kind of fair value gap, which is formed over here on the higher time frame. As soon as price started to reach this 30-minute fair value gap, that's when it started to react off of it. Now, many people would enter on this engulfing candle very aggressively. Now, that's one of the problems that many people would find, because have a look at this. Whenever you get to a point of interest, at some point you are going to have some kind of pullback. So let's just say over here, for example, we had a push up into the area, a push up. This engulfing candle downwards would have been somebody's entry. But what we usually see after this is either price does something like this, where it exceeds upwards, or it gives a tiny retracement and continues downwards. And that is exactly what we're going to be looking for over here. The simple pattern you're going to be waiting for is something like this. You reach your point of interest, price moves into it, engulfing candle down, tiny retracement, next engulfing candle. As soon as you see this little thing start to form in the market, just know that this area is now starting to become a better confirmed area. Of course, the win rate is 80%. That's what my whole elite strategy is based off. And for every single one, I've been recording pretty much all the trades that have been sent out. And as you can see, a -1R, 2R, 2.5, 5, 1, 4.5. Somebody could calculate how many risk to reward this is, but just in the past 3-4 weeks or so, these are pretty much all the live trades that have been sent into the premium group. And every single one is with a simple explanation. In this case, a 30-minute fair value gap. Immediately started to look for sells. As soon as I started to look for some of my engulfing candle confirmations, as you can see over here, that's where price dropped, gave us this little pullback, and then started to drop again with that engulfing candle. Now again, there are a few other things that are involved with my elite strategy. This is simply just one of the confirmations. But I genuinely don't think many traders in the industry even know this. It's a very simple concept, and in fact, it's something that retail traders actually use quite a lot. When you look at some of their patterns, for example, they look for stuff like this. Let's just say, for example, you are in some kind of channel like this. Pretty much they look for some engulfing candle pattern upwards, and that's why they start to enter. Always at the back of my head, I thought, how can I actually confirm these points of interest a lot more? Now, how do you actually apply this? Again, like I've said, this is one of the best patterns that we can see. There are many times that you can start to get tricked out, and this is why I say you need to backtest everything, and you seriously need to put the work in. Because again, me coming to explain this to you in a 10-minute video is not going to be enough. And again, this happens over and over and over again. Now, when it comes to actually developing this, in my opinion, I think if you are trying to apply this to one currency pair or any others, definitely backtest this for maybe even a few years. For example, when we look at some of the sort of results that we've done for Euro USD, especially when it comes to the elite strategy. Euro USD was tested for 4 years. In that 4 years, we tested it for every 6 months. Let me just quickly get the actual numbers of everything so you can actually see. But of course, again, like I'm saying, guys, just until I bring this up, it's going to be quite simply just looking for that engulfing candle. Once you start to see that, trust me when I tell you, your trading will actually start to skyrocket. And as you can see over here, these are pretty much some of the results that you can actually start to see over time. Euro USD has been tested an average 81% win rate from 2020 all the way up to the end of 2023. Every 6 months, we saw around 73%, 80%, 80, 87, 84. And as an average, in the end, we got an 81% win rate, a 3.69 RR per trade, and then an average 14.5% per month. One of the confirmations, as I say, within the strategy is exactly this, waiting for that engulfing candle. And I can explain this to you many times over and over again. Just looking at some of the trades in the past, for example, as well. Point of interest hit. As soon as we start to see some kind of engulfing candle pattern, that's when we start to enter. Again, another example over here. This was GBP JPY. As price started to push downwards, as you see, we saw basically a retracement up until Asia range. As soon as price started to reject off it, get that engulfing candle pattern. As you can see over here, let me just quickly push it over. That engulfing candle pattern, that's when we start to enter. Now, one last thing before we end this video. There's a few things that obviously you do have to take into account. One of the biggest things is your risk management. One of the ways that I would recommend of how to actually use this would be to prepare your lot sizes. So again, of course, you can't be setting limits with this kind of thing, when it comes to the engulfing candles. Again, if you wanted to, you can set it to engulfing candles. So for example, where price has pushed downwards, you can set it at some kind of area that it's engulfed previously. But again, this is pretty much the market execution type. So again, what I'd usually recommend is get on babypips.com or, whichever my FX book position size calculator, and just calculate it. What would the position size be for a 10 pip stop loss? What would it be for a 5 pip stop loss? Once you get them in line, that's when you can actually start to see how I can actually really improve it. So guys, that is pretty much going to be it from me. If you do want to join the free Discord down below, that is completely free access, and that is it. Genuinely, this will help you along your journey. Don't disregard it at all. I understand there are a few things where you have to be active on the charts, but trust me when I tell you, your win rate will actually skyrocket. So guys, take care, and I'll see you all in the next one.